Onto the risks, Giles. What are the risks of investing in infrastructure investment companies, particularly the political risks?
I think it's really important that investors understand the different sorts of infrastructure. So there's a world of difference between perhaps a toll road where you are relying on users to pay for that road, and there's obviously some uncertainty as to how many users will use that road in the future, and an asset where you're effectively being paid a rent by a government body simply to use the asset. We tend to work on the lower risk assets such as Thames Tideway Tunnel, which is a big sewage pipe being built under the Thames. We've got investments in railway tunnels in Belgium, for instance, in military housing in the US. You mentioned political risks. I think there are political risks in the sense that infrastructure is inherently a political asset class. We're all interested and all have opinions as to what infrastructure our countries need. But the great thing that dilutes those political risks is the fact that infrastructure is such a long-term asset. And once built, infrastructure should give a long-term revenue for 25, 30, maybe even 50 years. And that's what we're trying to do for our investors.
Yeah, long-term good for everyone. Phil, risks for you?
I think we divide risks into four main buckets. So market risks, so to the extent assets are exposed to changes in electricity prices or inflation. If taking a wind farm, for example, part of its revenue is linked to electricity prices. The second bucket is credit risk. So this is recognising that every asset relies on third parties to deliver services as part of monetising that asset, whether that's building the asset or operating the asset or off-taking the services provided by an asset. So therefore you're reliant on those parties continuing to perform those services to deliver value. Thirdly, operating risk. So these are living, breathing assets that need to be operated, and there's different levels of complexity in doing that, and we have to recognise that as part of our investment. And then finally, as Giles mentioned, political risks, which as a UK-focused fund, I guess we're directly exposed to changes in the political regime in the UK, and then more specifically, infrastructure often relies on some form of government support, whether that's capital support or revenue support or a more bespoke model of support, and therefore the continuation of that support through the asset life is critical.